My channel. My name is Oge for those that are just meeting me for the first time, and I always give a shout out to my coach for guiding me to understand this chart to a level that I do. Now today's strategy I want to show you is what they call the reversal strategy. Some people use it as a form of a whole strategy, and some people use it as a form of entry. So it depends on how you want to use this strategy for your advantage. A shout out again to my coach. Now we all know that for a bullish momentum, market moves higher high, higher low, higher high, higher low, higher high. And for a bearish momentum, it moves lower low, lower high, lower low, lower high, lower low. Now this is for a bullish momentum and this is for a bearish momentum. Don't forget, this is our higher high, higher low, higher high, higher low, and higher high. Now, how do we use this strategy? For a bullish momentum, markets must come down here and break the higher low, then come back to any institutional order, reference point. That's what I'm looking for, our internal liquidity, but I will not use those words. I will use institutional reference points for those who don't understand the difference between internal liquidity and external liquidity. Now you can either come back to an order block, that's the last candle before the impulse move, a fair value gap, or a liquidity void. Market to come back in here, that a fair value gap, order block, liquidity void, and continue in its direction. This is for what? A bullish scenario. You can see it will be a change of character here. You can use it as a strategy and you can also use it as a form of entry. It depends on you. How do you want to use it? For a sell scenario, market has to take the, don't forget, lower low, lower high, lower low, lower high, lower low. Market has to take the lower high, come back to any institutional reference point, liquidity void, fair value gap or order block, and have an impulse move. Now we are going to go into the charts. Now this is just the sketching of what we'll be looking for. Now in the charts, now I'm going to show you how it's being done. You can use it as a form of strategy. It all depends on you. Now if you look inside here, you can see what there was a shift in market structure. This, so those that want to use it as a form of strategy on its own. And when market came back, what do we see here? Markets came back into a what? Into a fair value gap. Do you see it before it went down? This can be used as a form of strategy. I've been saying this, and also as a form of institutional reference points. Sorry, as a form of strategy, or it can be used as a form of entry in a zone. Let me show you an example how you can use this method for your form of entry. It can also help you to reduce your level of stop loss. It can help you a lot. You can see it here. There was what? A shift in market structure here, and market shifted structure up here. But I want to show you a secret in just one point here. Before markets came here before markets came here, you can see that there was a shift in market structure. What do we have here? We have an order block as one of the institutional reference points in here, and we also have a minor look inside here, a minor fair value gap inside here. But what are we going to do? We can go down to 5 minutes. We can go back to 5 minutes. I'm going to use that same strategy to get an entry. Now this is a swing point up here. I can take this candle or this one here. This is a swing point up here, the highest point of the zone. Why is that thing so dark? Okay, it is very dark. Now let's see. I want to show you how you can use as a point for your entry. Now what has happened? Market has shifted structure. A swing point, this is one of the swing points. Another swing point was being broken here. Can you see this? Now don't forget, there's a secret. Which is the secret is that when you want to buy market, you buy low and you sell high. This is a mitigation block. Don't forget it's a mitigation block because it was meant to come and break this structure here, but it shifted structure, making this a mitigation block. But if you look inside very well, we have what? Also a fair value gap. Put it inside here. What's that thing? Why is the arrow so, the line so dark? I don't like that. Why is it so dark? I'm so sorry. Okay, you can see the lines here, right? Now when we come back, let us see what market wants to do to us. You can see market enter the zone, and a lot of us will use that as a very good entry point. We can see the market shifted structure. Can you see that? We can put our stop loss around here. You see 11 pips. Come down to 1 hour or 4 hours where we got that zone from, and we can target this up place here as our take profit. And you can see that was a good trade. You see 1 to 5. Let's see what will happen here before its market does its weary it's craziness in this chart. Let's see. Do you see how this trade is going beautifully well? Because why? The reversal strategy we used, we got our normal reference point order block, and we went down to a lower time frame and got a very good entry in this market. Do you see? Okay, that was what the change structure actually here. But if you can see here, before market misbehaved, what happened? We got a good trade of what? 1 to 4 before there was any kind of mess movement. Market want to form its own kind of, there was a shift in market structure here. You can see it here. This is a swing point. I'm going to do a video on this so you can understand how it works. This is a swing point, but if you look at it very well, market shifted structure here. When markets broke this swing point here, market shifted structure here, that was a swing point that was broken, and you can see that was what? A swing point being broken, mitigation block, and it came back into this fair value gap. Let me show you. To this fair value gap, you can see it here, right? This fair value gap, and what happened? The impulse move went down. So you can use the strategy for entry, or you can use it as a normal strategy. I did one of the videos I did where I indicated. You can see what happened here. The structural break here, making this an order block. Okay, another block. And what can we see here? And that's fair value gap, making that order block also a valid order block. Get on my straight line, and you target the old lows that are here, targeting here as your take profits. And let's see if market gets that level. If it not, it's market. If it not gets that level, is market doing its thing. Well, that's how you can use the reversal strategy. You look for a change of character, institutional reference point, order block, liquidity void, and fair value gap, and you can use it as a strategy on its own, and you can use it as a point of entry. Don't forget to subscribe on my channel. I hope you are gaining value. Ask questions in the comment section. I'll reply every question that you've been asked on the comment section. Like and also share for those who have friends that are struggling. I hope this video will have an impact in their trading also. Don't forget to subscribe on my channel again, and thank you.